Hello, I'm Kate from the Money Pages, and I'm joined today by Sarah Tinkler from Clever Mortgages, who's going to talk to us about remortgaging and the cost of living crisis. Hello, Sarah.
Hi, Kate.
Welcome.
Thanks for having me.
So we're talking today about remortgaging in a cost of living crisis. Now, we've had so many people who've written into us to say that they've got mortgages, it's time to renew their mortgage, but because of what's been happening in the last 2 years with rising mortgage prices and rising everything prices, their outgoings are getting higher, and they're worried about their mortgage. Is this something you're experiencing in your job as a mortgage broker?
Yeah, absolutely. We see it on a daily basis. I mean, you've got clients that are coming off of a 1-2% interest rate that, we wish we would have fixed for 10 years, I think, sometimes. But, with them coming off of that onto maybe 4 or 5% interest rates, but that's not just going up. It's gas, electric, water. Everything has generally increased for clients. So.
And are mortgage lenders looking at these outgoings when they come to look at the applications for these remortgages? Are they comparing, and noticing that there's more coming out of the bank accounts?
Yeah, absolutely. I mean, it really does depend on the individual client circumstance and what you're doing for the client. Lenders are trying to help support where they can do, but a lot of lenders will look at things like national statistic figures or your bank statements and pay slips to see exactly what you do pay in those areas, to have a look at how that's going to affect the affordability for a mortgage.
And what are they looking for in the Office for National Statistics information?
So if they will go by, if you've got a family of 2 people, for instance, and a child, they'll look at generally what the average is for gas, electric, water, general food. So they will just look across the board. Some lenders will take that rather than looking at what clients actually pay on their bank statements.
So what can people do if they find themselves in this situation? They've got their mortgage due for renewal this year. They know that the bills have all gone up. Really worried about what to do. What can they do?
Definitely speak to a broker. Absolutely, speak to a mortgage broker. Let them know all of your circumstances, because there are things that you can do around mortgages. I mean, lots of people think that a standard mortgage is a 25-year mortgage now. They might have a 22-year term left or something. It might be that we can look to extend terms for them initially in the interim, just to help support that. If there's plans for the future, if they've got changes that they're aware of, or savings accounts that mature, different situations for different clients, really. So definitely speak to a broker about your circumstances. They'll also be able to have a look at different lenders that offer different scenarios. So some lenders will comfortably take you through to the age of 70. We've got some lenders that will take you through to the age of 75 or 80 if you're paying into pensions. Some that will take you beyond that if we can prove pension income and things for the future as well.
And so what will that do then if you sort of extend the term? Will that make your repayments more manageable?
Yes, it can do. So initially it will mean that the monthly payments will be slightly lower. It does mean that you're taking your mortgage over a longer period, so it's not to be done lightheartedly, because of course the quicker you pay the mortgage, the less it's going to cost you. But ultimately it's good to have that conversation, because you've got to understand what's right for you now in this moment, with the option to look at what we can change in the future to make that better for you. So if you do speak to a broker, it's very important to have the conversation about what that's going to look like for you at the moment if you do extend the term, but how you can change or rectify that and what things are going on in the future. I mean, if you have a client that takes a mortgage to 80, for instance, and they say they're happy to work till that age, is that realistic? Are they actually going to want to do that? As much as they might have to do that, do they want to do that? So get a broker that's going to put a plan in place for you as well. If the rates do come down, you can reduce your term later on. Can you make overpayments to the mortgage? So if you get bonuses through work, things like that on an annual basis, could I actually pay a bit off if I did get that? Have I got savings accounts? Am I, as awful as it sounds, due to receive any inheritance or have pension pots that I can pull on in the future, or investments, things like that? So they should take into consideration everything for you.
Yeah, and is there anything people who maybe are managing the cost of living okay, maybe they're sort of keeping things in a manageable place, could they be overpaying now, or could they be saving money? What would you advise for people, who are in that situation?
Yeah, absolutely. So overpaying a mortgage is definitely something to consider. People that are on the low interest rates at the moment, I definitely advise them to overpay, because of course once they then come out of that slightly lower interest rate onto the higher interest rates that we're seeing at the moment, if that's still the case when they look to review, they'll have less capital outstanding, which can help them going forward. It just means their payments would be lower than what they would if they hadn't made any overpayments. So definitely something to be considering. But again, it's considering what the other options are out there as well, and what's right for that individual, because some people won't overpay their mortgage, they'll invest in other things if they're happy to take higher risks in investments and bits that could maybe earn them more money and then pay off a lump sum later down the line. So it's just managing that client and understanding that client's needs as well.
Is it sometimes cheaper, or not cheaper, but is it better if you, instead of overpaying, put that money that you might overpay into a savings account? Would that be more beneficial for you going forward?
It can be, absolutely, and it really depends on the savings accounts that you're looking at. So one thing to remember about the mortgage is that you're clearing more capital. So if you make an overpayment, it's naturally clearing capital every month. So the following months and subsequent months after that, you're going to be saving interest because you're paying less interest because you've got less capital outstanding. With a savings account, if you have a higher rate of savings on that rather than what you're paying on your mortgage, so the interest on your mortgage might be 1%, for instance, but in the savings account you're going to earn 2%, then potentially yes, but it can depend on that. It will depend truly on that interest that you're going to be receiving on that savings account as well, and how that's capitalised. Because if it's capitalised and if you get the interest on an annual basis, then you're not necessarily making on the interest as well. So if you put £10 in a savings account and you don't get the interest until the end of the year, if you get it every month, then you're going to be capitalising on it and earning a bit more. So it really is about getting the right advice at the time, depending on the interest rates on savings and on mortgages.
So is that something a mortgage broker could help you with?
So a mortgage broker would definitely be able to help you with the mortgage side of things. They wouldn't really be able to give you the advice fully and truly on the savings. You need to speak to a financial advisor for that, really. But hopefully a mortgage broker would know a financial advisor maybe that you could speak to, or if you know one yourself, cross-referencing the two would then give you that correct advice. Because there are other savings accounts. It's not just your standard savings accounts. It's things like gilts and stuff like that people might look at investments if they're happy to take a slightly higher risk with their investment and money and stuff as well. So that really needs to be specialist advice.
And a lot of people are coming to remortgage this year. What else can they do to sort of improve their chances of, getting that all-important approval from the lender?
So be very much on top of things like making sure there's no missed payments, ideally, credit files, understanding your credit files, talk it through with a broker. If you have had things like that because of the cost of living, don't be scared to talk to somebody about it, because there's lots of people that are going through it. So really do just have that conversation. There are things that the broker can advise you to do and help to make sure you get the best option. Also, the broker should check out things like product transfers with your existing lender. It's not always the best option to move away from your current lender. The broker should be able to advise you on that as well and tell you, this is what your current lender's offering, this is what we can get with another lender, but are there any costs involved with that? Does it cost you, are there solicitors, valuation fees, etc.? Is it actually worthwhile to move away, or is it better to do a product transfer? Have those discussions around what the existing lender can offer as well, because even with a product transfer, the lenders are looking to support, so they'll do extended terms and things like that within there as well.
So a product transfer is when you move to a product but with the same lender, that's right, isn't it?
Yeah, absolutely.
And are there advantages to that? Is it a little bit easier?
Yeah, so 100%. You don't. There are advantages, so you wouldn't have to go through a full new application. It is just securing a new rate. You're coming off one rate with your lender and you're securing a brand new one the day your old one ends. So there's no affordability checks with some lenders, no bank statements needed to be provided, pay slips, etc. So it's not quite as vigorous as a new full application. Some lenders will check those, and it should be that your broker checks that with you and affordability with you to have those discussions as well, because you don't want a client just to go on to a new rate but not actually be able to afford that rate. So they should still be having those conversations with you, but it is a less of a vigorous process, absolutely.
Yeah, thank you. One final question. top tip, do you have a top tip for people who are watching this, who are maybe, you know, remortgaging, or anyone who's, you know, about to take out a mortgage, you know, to sort of help them on their way?
So top tip, definitely speak to a mortgage broker, get that advice, speak to somebody that knows what they're doing in the area, make sure that they're giving you the best advice. If you don't feel comfortable with the advice that broker's been, don't be scared to get a second opinion, but definitely speak to a broker and make sure you're getting the right advice for you in the current market.
Oh, that's great advice. Thank you so much, Sarah, for joining us today.
That's okay, thanks for having me.